There's a financial storm brewing over the U.S. housing market, and this isn't just a little rain shower. We're talking about something powerful enough to change what owning a home in America even means. And frankly, the signs are getting impossible to ignore.
Across the country, something just feels off. You see it in houses just sitting there, abandoned. Streets that are way too quiet. The whole idea of a bustling community just seems to be, well, fading away in real time.
So let's be really clear. What we're witnessing, it's not some mild correction or a temporary dip in the market. The source material we're looking at suggests this is something way more severe, a full-on structural breakdown, where that dream of homeownership is literally being replaced by foreclosure signs.
Okay, so where do we see the first cracks appearing? Well, it's in the very places that, not too long ago, were symbols of unstoppable growth, America's tech hubs. All that optimism that fueled their incredible rise, it's now vanishing at a really alarming rate.
There's a name for this: tech withdrawal. For more than a decade, you had these cities that were just supercharged by a constant flood of tech money and high-paying jobs. But now, layoffs are piling up, companies are calling people back to the office, and that whole engine is just stalling out, leaving their housing markets incredibly exposed.
Let's start with our first case study, Washington State. For years, right, cities like Seattle and Bellevue, they just seem to defy gravity, thanks to giants like Amazon and Microsoft. But that whole illusion of endless growth is unraveling, and it's happening fast.
Just look at this dramatic disconnect. As thousands of tech jobs were cut, the housing supply shot up 21%. At the same time, sales plunged to their lowest point since 2011. The buyers have just disappeared, and you can bet the sellers are starting to get desperate.
And this really highlights the affordability crisis. A typical mortgage payment in Seattle has skyrocketed to $4,800 a month. Think about that. Just 3 years ago, it was $2,900. Even those high-earning tech professionals are quietly falling behind.
Washington isn't some outlier either. We're seeing the exact same pattern in other tech-heavy markets. Over in Utah's Silicon Slopes, home sales are down 19%, while inventory is just blooming. In California, the Golden State lost over $16 billion in home value in just 1 year. Yeah, the tech-driven boom is officially over. But listen, the tech downturn is just one piece of this puzzle. The second major force is a crisis that isn't just about economics, it's about the environment. All across the country, climate change is making the American dream uninsurable, and if you can't insure it, you can't afford it.
Ground zero for this crisis is Florida. The Sunshine State was the big star of that post-pandemic migration boom, right? But now, it's at the epicenter of a looming collapse. That paradise is quickly turning into financial quicksand.
Since 2020, insurance premiums there have exploded by over 300%. Big providers like Farmers and AAA have actually pulled out of the state entirely. This leaves homeowners paying over $8,000 a year for basic coverage, that is, if they can even get it at all.
The story is tragically similar over in Louisiana, a state that's just getting squeezed from every angle. You've got natural disasters, people leaving the state, and an insurance market that's in a total breakdown.
And here, the threat is existential. As sea levels continue to rise and the insurance market completely collapses, the state isn't just dealing with falling property values. It's facing a future where entire communities could literally just disappear.
So, you see, different climate risks are all leading to the same financial disaster. It doesn't matter if it's hurricanes and floods in Florida and Louisiana or extreme heat, drought, and wildfires out in Arizona. The result is the same. Insurance companies are running for the exits, costs are soaring, and homeowners are left trapped.
So you have these twin crises of tech and climate, and they're being compounded by a third, more traditional threat, the classic speculative bust. In states that rode that huge wave of easy money and tourism, that illusion of nonstop growth is now completely vanishing.
Let's take a look at Nevada. For years, Las Vegas real estate was treated like a high-stakes casino game, with investors flipping houses at an incredible speed. But what happens when the economic momentum slows down and the tourists go home? Well, the whole house of cards starts to fall.
And we're seeing that cycle play out right now. First, tourism and speculation slow down. Then, the investors all rush for the exits, which causes listings to surge. Next, desperate sellers start slashing their prices. And finally, all that new construction that was booming, it freezes right in its tracks. Nevada is deep into this cycle. A really similar story is unfolding in Texas, a state that was marketed as the ultimate land of opportunity. That promise of endless growth and affordable housing that drew in hundreds of thousands of people, it's now unraveling, fast.
The scale of the fallout here is just immense. Texas is looking at an estimated $32 billion drop in home values. In cities like Austin, which saw prices jump nearly 60% during the pandemic, the air is coming out of that bubble very, very quickly.
So, after going through all this, you have to ask, what does the American dream of owning a home even look like anymore? The entire landscape has fundamentally changed. It's being reshaped by forces that are powerful, and they're all interconnected.
So to recap, we've really seen three distinct but overlapping crises. First, a painful correction in markets that bet everything on the tech boom. Second, an affordability crisis driven by this new reality of uninsurable climate risks. And third, a classic boom and bust cycle in states that were built on pure speculation and easy money.
The source material really paints a grim picture here. Communities unraveling, lifelong investments just evaporating. And all of that forces a final, pretty unsettling question. What happens to the idea of America itself when its central promise, the dream of owning a home, becomes an impossible fantasy?